Okay, so Japan's economy is hitting these huge record highs. The headlines are all celebrating this incredible growth. But if you talk to the average person on the street, well, it just doesn't feel that way. Today, we're going to dig into the data to understand this strange paradox. It's really a tale of two very different economic realities.
So let's start with a number that's almost hard to wrap your head around: 600 trillion yen. For the very first time in history, Japan's nominal GDP, that's the total value of everything the country produces, has blown past this incredible figure for fiscal year 2024. I mean, that's a number that definitely grabs your attention. And you can see here, this isn't just some random one-off spike. We're looking at 4 straight years of growth. On the surface, this paints a picture of an economy that's finally shaking off decades of stagnation. But you gotta ask, is that the whole story? To figure that out, we've got to look a little closer at who's actually benefiting from all this growth. And we're going to start with the corporate sector, because this is where a real puzzle starts to take shape. The data here is just undeniable. Corporate profits are at an all-time high. It doesn't matter if you're looking at manufacturing or other industries, they are all doing exceptionally well. The bottom line is, Japanese companies are making more money than they ever have before. And this is where we hit the core tension. See that top line? That's the raw amount of money being spent on investment. And sure, it's going up. But look at the bottom line. That's real investment. Once you strip out inflation, which erodes the value of money, you see that investment is basically flat. So all those record profits, they're not really fueling a big boom in new factories or tech back home. Which, leads us to the crucial question at the heart of Japan's whole economic challenge. If companies are sitting on these record profits, but they aren't pumping them back into the domestic economy, then where on earth is all that cash going? So let's shift gears now. Let's go from the corporate boardroom to the family kitchen table, because over there, the economic story feels completely different. While corporations are flush with cash, everyday Japanese households are really starting to feel a serious squeeze.
It really all comes down to this growing gap. Prices for the things you need, like food and energy, are climbing and climbing. And yeah, you hear about some wage hikes in the news, but for most people, their pay just isn't keeping pace. So even if your paycheck gets a little bigger, your actual power to buy things, your purchasing power, is shrinking. And look, this isn't some abstract economic theory. This is hitting people in their wallets for real. Just take a look at the cost of rent in Tokyo. It shot up at the fastest pace in more than 30 years, way more than the rest of the country. For so many people, that's a direct and painful hit to their monthly budget. So what do you do when you're feeling that squeeze? Well, you change how you spend. The report points out that people are making these careful, defensive choices. Switching from beef to chicken at the grocery store, maybe picking the value meal when they eat out, just cutting back overall. The report actually has a name for this: a rise in saving consciousness. So we have these two totally diverging stories, right? Record corporate profits on one side and squeezed household budgets on the other. So what's really going on underneath it all? And what does the report suggest Japan can do to escape this rut and actually build some sustainable growth? A huge obstacle, and something that's been talked about for years, is getting over this deep-seated deflationary mindset. It's this long-held belief that prices and wages just aren't going to go up. It makes companies hoard cash instead of investing or raising pay, and it makes all of us save instead of spend. It basically traps the entire economy in this low-growth cycle. Another challenge is baked right into the structure of the labor market itself. There's this major mismatch going on. You've got huge worker shortages in areas like the service industry, but then a surplus of people looking for administrative jobs. This makes it super difficult to get the right people into the right jobs, and that holds back everything from productivity to wage growth. So, what's the fix? The report lays out a pretty clear 3-part strategy to try and create what they call a virtuous cycle. First, you've got to boost wages so people have more money to spend. That spending then encourages companies to invest those record profits back home. And all of this is supported by making the labor market more dynamic, making it easier for people to move into those high-demand jobs. So at the end of the day, we have a pretty clear diagnosis and a potential cure. The numbers show an economy that's really at a crossroads. The big question now is whether these steps will be enough to finally shatter that decades-old mindset and build a new era of growth where the benefits are actually shared by everyone.